Hi there, welcome to Kneppy Invest and welcome to the 25th of June 2025. Time is currently 3:18 p.m. So about 51 minutes left of trading today on a relatively flat day. Maybe that could be seen as being slightly negative because of the strong lead-in from Wall Street. But I'm pretty sure what's happened today is we've had a pretty bad day for mining. Resources currently down 1.49%. But on the flip side, we've had a pretty good day for the financials, particularly the banks. And the main reason behind that is because of monthly CPI numbers that did come out for Australia today. I'll talk about that more in a second. Okay, so the agenda of today's video, we'll have a look at the ASX today, focusing on the best and worst performing sectors, indices, financials and banks, and also companies. And then we'll go to the top 5 stocks of the day. The stock of the day was sort of a no-brainer, had to be Droneshield, surely. And then some of the other companies in the top 5, fairly interesting. One of the companies' share price is not up or down at all because they have made a huge acquisition, pretty big. No, I suppose it's not that big compared to the size of the company, but they have made a pretty big acquisition that, since I am a shareholder, I'm very interested in. And that's Xero, of course, Xero. And then we'll turn our attention to the chart of the day. Treasury wines, inspired by Jake Chard, who asked, can you please cover Treasury wine? ASX update was up 6% at open yesterday and then dropped. They did release an announcement. I thought, oh, this could be it for Treasury wines, but we did see a bit of selling coming in. And I do think there is definitely an argument that where the share price is now for Treasury wine is at a really low, interesting level, maybe some good value for that company. I'm not sure I would call Treasury wines a high quality company, but maybe it is pretty good value. And then after the chart of the day, I'll do a bit of an update on Collins Food and Cogstate. Those two companies came in number 1 and number 2 in yesterday's video, potential breakouts. And I think maybe today we have seen confirmation of those breakouts because both companies' share price up a fair bit today, between about 7 and 10%, maybe even 11%. Okay, on to the ASX today. So relatively flat day. We had a really strong lead-in from Wall Street. NASDAQ up 1.53%. Dow Jones up 1.19%. In fact, NASDAQ is almost possibly at all-time highs. Yeah, that's interesting. So we want to see it get a little bit higher from here so we don't see a triple top. But Dow Jones not quite as bullish. So a pretty good lead in from Wall Street. So I did expect an okay day today on our market, but just looking at how much resources has dropped today is probably the why we've had a relatively negative day or bad day compared to what we saw on Wall Street. But we'll confirm in a second or so what has caused resources to drop. Is it iron ore or is it other things? I don't think it's uranium. That's in energy, by the way. So let's have a look at the best and worst performing sectors. So no surprise, financials and banks, best performing sector and indices. Whole reason behind that is because Australia's CPI numbers came out today and Australian monthly CPI hits 7-month low. I've also seen a little bit of chatter that this means higher chance of interest rates cuts. And there's a lot of people out there who believe if interest rates are cut, that's beneficial for the banks. But it's really interesting because when interest rates started to rise a few years ago, that was also beneficial for the banks. So not sure which way it is. I can definitely see both arguments, and maybe overall it's just a wash. So when interest rates are rising, that's beneficial for the banks because increased interest margins. That's really good. So when interest rates are dropping, that's beneficial for the banks, less chance of recession, less chance of mortgage stress, which should be beneficial for banks' financials because the worst thing that can happen to banks is a recession. And because they're cyclical, banks are highly cyclical, which I think does shock a lot of investors. We saw, I think it was Westpac that was bailed out in 1990. And if you just go back to the GFC, you can see the share price of most banks, if not all the banks, drop significantly. And that was the time to buy it, just after the GFC. So anyway, so we have seen the banks rise today. In fact, they're the best performing sector and indice. There was also another interesting question. I think this was from, if I can find it, more than likely I won't be able to find it now. This was in regards if I had any regrets not buying the banks. In fact, here it is. Do you regret saying that CBA was overvalued and not taking a position when it was 150? Now that you look at the share price today, and the easy answer to this is no. Well, definitely not the first bit. I don't regret saying CBA is overvalued because it's still overvalued, way overvalued. Do I regret not taking a position at 150? No, because there's so many opportunities on the market. So just because you miss one opportunity doesn't mean you have to regret it, because if you regret every single opportunity you don't make, you are doing a lot of regretting, lots and lots of regretting. So do I regret not taking a position or trading position CBA? No, absolutely not. And one of the other reasons behind that is simply because, well, the risk reward. Because it's significantly overvalued, the risk is you're not going to get much return moving forward for CBA. So I might answer this question in more detail on Saturday. But that is a good question, a good, interesting question from Mace552. Okay, so what else? Pretty negative day for materials. Energy didn't save the resource sector today, down 0.61%. Telecommunication, IT, staples, healthcare, all down. ASX 20 up 0.25. And I'm assuming we've seen a really good day for the 4 big banks. And I'm assuming we've seen a pretty negative day for iron ore. So let's see how right we are. Also a pretty bad day for Telstra, Woodside, maybe some of the IT companies like WiseTech, Woolworths as well. So a bad day for defensive companies. I'm just going to say that right now. See how right I am. I would say 9 companies up, 11 down. Oh, even worse than that. 8 up, 12 down. You might be saying, how? How does that work? How does that work? 8 companies up, 12 down, yet the ASX 20 is up. Well, that's probably because some of the bigger companies are up, and maybe they're up by a bigger amount, percentage, than the other companies are down. So let's have a look by market cap. By the way, actually, I'll talk about this and see if I can remember what I was going to say after that, by the way, in a second. Yeah, so CBA 1.57%, NAB up a fair bit, Westpac up a fair bit, ANZ up 1.4%, and CSL is down, BHP is down 1.52%, Macquarie Group is up, Goodman Group is up. So you can see out of the top 9 companies on the ASX 20, 7 of them are up pretty nicely, except Wesfarmers only up 0.1%. And then you have to go down to the bottom of the ASX 20 to see, if you look at the bottom 10 companies, most of them are down except QBE Insurance. Best performing company looks like one of the banks. Yep, CBA. In fact, 3 of the best performing companies are the banks. And the worst performing company is Fortescue. And then BHP and Telstra and Rio Tinto. And Transurban, defensive. I always forget Transurban is in the ASX 20, and that is definitely defensive. What I was going to say before, Bell Potter analysis top stock picks for financial year 26. That reminds me of a question from someone. Yeah, Ben Hutchison. One idea for a potential offline video would be a reaction evaluation vid for Bell Potter's top financial year 26 picks. That's a really good idea. A really good idea from Ben Hutchison. So thank you for that. And the other thing is, CBA is relentless, but fighting the momentum requires perfect timing. So that's true. That's true. CBA has a lot of momentum, and if you really want to fight that, well, good luck, because this irrational buying of CBA might continue for who knows how long. And so the saying is the market can remain irrational for a long period of time, and that is what's happening with the banks right now, particularly CBA. And that's because a lot of that is just because of momentum. But when momentum starts to turn around, when the trend starts to turn around, I think the share price of CBA could drop significantly. But that might not be for another few years. Anyway, so there's no way I'll be trading CBA right now. There's a lot of opportunities on the market, and I don't think you want to hear any more about the banks, unless you're heavily invested in the banks. Okay, now on to the top gainers. So let's have a look here. I don't think there's going to be any surprises here. And the reason I say that is I went through the top gainers and top losers before I started recording, and there was no surprises. Droneshield, pretty good day. Look at that massive turnover. Share price up 22.69%. I thought maybe the share price of Droneshield will pull back with the decreasing tensions in the Middle East, but who knows? if that what do you call it, ceasefire will remain intact. We just don't know. When people hate each other, the slightest thing could set someone off. Slightest thing. And other than that, nothing much. There's nothing much in this top list of companies by percentage change. And a lot of these companies are really small, with companies having a market cap of 4.7 million, like Zimmy. What does Zimmy do? No idea. No idea. And that is the smallest company in that list. The second biggest company after Droneshield, by the way, has a market cap of 104.59 million. That's Astron Corporation. And again, no idea what that company does. Top gainers by market cap. Might be, QGQ has had another good day. I did see this before, and I was thinking I should have a look at the chart for this one, because that's 2 good days in a row. So the chart could be, no, I thought maybe the chart would look a little bit better than that. Yep, it's just 2 good days in a row. Okay, so let's go back. Droneshield, Light and Wonder. What's happening to Light and Wonder? Did they release something? I don't remember Light and Wonder releasing anything, but that's a nice little rise. Not complaining. Nothing. And you can see Collins Food has had another really good day, up 11.27%. SIG Global and Tasmea, 2 companies I will be talking about in the top 5 stocks of the day. So I'm glad they are in this list. And Hum Group, looks like there is a takeover bid for that company. And Paladin Technology, I should have put that company in the top 5. I'm sorry. They did release, that was something interesting. They're sort of like a, not quite like a private equity, but they do invest in mostly non-listed companies. And they've invested in a company called Dash, and Dash raised some new capital at a 49% valuation uplift. So that's beneficial for Paladin Technologies. I don't mind this company, but the market just doesn't like Paladin for some reason. And I do think this company is probably undervalued based off its asset values. I think they really undervalue their assets, or how much their assets are worth. And I think this company is trading significantly below their true asset value. I think they're even trading significantly below their asset value, but I believe they're significantly trading below their real asset value. If they really wanted to value the assets, they would be probably significantly higher than where they are now. But look at the chart. Chart is like a no. Okay, what else is there? Nothing. Nothing to note. In some interesting companies in there, like ReadyTech, Adairs, yeah. So nothing much else to talk about. Top losers. I don't remember anything here. There's Arctis down 17%, and there was also another. I did respond to someone here. Who was it? Oh, Black Top Images. I hope you're not referring to my comment at Arctis. No mention of moons. No, definitely not talking about you. Your comment was fine. Your comment was brilliant. In fact, I said your comment was excellent. I deleted the other comment. So someone just mentioned me, or mentioned in the comment section, that I was so wrong about Arctis. It's going to the moon. Share price is going to the moon. No reason why. And I don't like those sort of comments. And I've probably mentioned that when you see a chart like this, when the share price has risen significantly like this, eventually you will see the share price drop back a fair bit. And we've seen that with Arctis. In fact, over the last 2 days, share price has dropped from 25 cents to 18 cents, about 30%. Is that right? About 33% in 2 trading days. So this is the sort of thing you will see time and time again. Anyway, doesn't mean Arctis is not a potential buy when the share price starts to settle down, but just be aware that there's going to be a lot of volatility when you see the share price of a company run up significantly in a very short period of time. And maybe it will go to the moon eventually, but not just yet. Okay, top losers by market cap. We have MinRes, Emerald Resources. Emerald Resources, it was in my list yesterday, and I thought, whatever. They did release quality production, and this was sort of a downgrade. And the reason I say it was sort of a downgrade was because they sort of said it. June 2025, quality production below guidance. And the share price didn't drop all that much, so it didn't make it in the top 5. In fact, it was only down 1.52%, so I thought, no, whatever. But the share price down almost 10% today, so maybe this is sort of like a delayed reaction. Maybe. And let's have a look at the chart for Emerald Resources. That's nothing too horrendous, but yeah, anyway. So that's Emerald Resources, and there was another one here, Paragon Care. I'll talk about that company in the top 5. Develop Global, doing a capital raising, share price down 5.85%. I think this is a great capital raising from Develop Global because the share price has increased significantly in the past few months, and that's exactly what management should do. Share price has gone from $2 to $4.80 on nothing much, not significant news flow, just a lot of positive momentum in the company and sentiment. And this is exactly when a company should do a capital raising, when you see the share price rise or rally like this. Take note, Vection Technologies, you do the complete opposite. You capital raise when the share price has plunged 50%. You should do the exact opposite to what you do. Okay, now on to, have I finished this? No, I haven't. Nothing else here. Nothing else here. So let's get to the top 5 stocks of the day. Starting off with Xero, XRO. You can see share price hasn't moved. There's five surplus shares. No volume. Very quiet trading for Xero because they're in a trading hold. They're in a trading hold. And they're doing a pretty big acquisition, Xero to acquire Melio to accelerate US growth, raises equity. I do, on occasion, when I own a company like Xero, get a little bit nervous about acquisitions because research has shown the bigger a company gets, the less likely acquisition would be beneficial for shareholders. In fact, you only really want to see a company being acquisitive when they're relatively small. So I do get nervous about these sort of things. My nervousness did sort of decrease a little bit when I had a look at Melio, and I went, well, this company is growing quite significantly. In fact, if I had a look at Melio without knowing anything about potentially being bought out by Xero, I would say, oh, this is a pretty interesting company, just how they are. Well, maybe not what they do, but how they're growing. So they do sort of fit in with what Xero is trying to achieve. Like, so if you go through the strategic rationale, solves critical customer need, powerful strategic fit, world-class team and platform, which whatever. They have a 3x3 strategy, Xero, and this does fit into within that. So world-class SMB payments player, 127% growth. No, that's per year. That's per year. They've gone from almost no revenue in 2021, it's like $6 million of revenue in 2021 to $153 million of revenue 5 years later. That's pretty good growth. I was actually quite impressed with that. I was saying, okay, if they continue to grow like that, which is going to be hard. In fact, it's almost impossible to be growing at 127% CAGR from here on in. But even if they grow at, say, 20, 30% CAGR for the next 5 to 10 years, I think this is going to be highly beneficial, or could be highly beneficial for Xero. Acquiring Melio is fundamental to our global growth aspirations. I'm still a little bit dubious that Xero can make it into the USA. They also talk about the rule of 40 here. Looks like this outcome is expected to support our aspiration to deliver greater than rule of 40 outcomes for the group in financial year 28. And they're talking about their 3x3 strategy and our ability to compete in the United States. So this could backfire on Xero because a lot of times this doesn't work when you try to move into the United States. They are trying. They could succeed. They could succeed, but I will still be a little bit wary about this. A pretty big price they are paying. So we're talking about almost $2 billion. I think it's about $2 billion. Where is it? $2.5 billion. So it's a pretty big. By the way, this company hasn't been around for long. Melio hasn't been around for long. So I'd love to be the owner of this company because you've grown it from nothing to a company worth $2.5 billion, 13.4 times analyzed revenue. So not profit, revenue, and 9.7 times next year's revenue. Or is it? I can't remember. Anyway, they're doing a placement, pretty big placement, 1.85 billion placement, but also doing, a capital raising for shareholders, an SPP, much below 1.85 billion. I would prefer that to be flipped, where shareholders get a much bigger stake, because it looks like they will pare it down. Anyway, so do I like this? I think it's better. I think of this acquisition in a much better way after going through the presentation. But I'm still a little bit wary. Still a little bit wary about this acquisition, because so many times in the past we've seen a big company like Xero make a pretty big acquisition and it just falls apart. Hello, Slater and Gordon. Yes, I'm talking about you. You are one of many. One of many. But I do think this is better than what Slater and Gordon bought back in 2015. I'm just going to guess. Okay, so let's have a look at the chart for Xero. The capital raising is done at a, was it 9% discount to previous day share price. A beautiful chart. No complaints about this chart. Share price is near an all-time high. If you have a look at the weekly chart, this is the chart of a high-quality company. And look at me, I bought it right on the 200-week moving average. That was just a fluke, because I didn't know this rule, the 200-week moving average rule for high-quality companies. I probably wouldn't have called Xero a high-quality company until recently, however. But definitely this is in my super. Okay, coming in at number 4, we have two companies. We have Paladin, share price up 3.07%. Thank you. I am trading Paladin right now because the chart looks pretty good. Managing Director and Chief Executive Officer appointment. So the reason the share price is up could be because of that. However, I did note in Capital Brief that, that's very important here. Collins Food shares continue to rally as analysis upgrade price target. Okay, that's very important. Okay, I'll talk about that later in the video if I don't forget. There was a mention, here we go. Deep Yellow Paladin Energy rally as UBS hikes uranium price forecast. I absolutely love the uranium charts right now. I love these charts. This is a beautiful chart, not the weekly chart, the daily chart. It looks brilliant, beautiful breakout. I like this chart. So as soon as I saw this chart, well, not as soon as I saw it, I've been following this chart for a while, and I just decided to buy some Paladin shares. And let's have a look at the Paladin chart. And this is another nice looking chart. We'll get rid of the 200-day average. And we've had a moving average crossover. Now, we did get a moving average crossover back in October. And that faltered fairly quickly. So we don't want this to be sort of a replica of that. But I do actually prefer where Paladin is right now compared to then. I do like how the share price action has been going on the last month or so. So I do like this chart. Now, the other company that fits in with Paladin is Paragon Care. They also had a bit of a change in management. Appointment of CEO. When the share price is down 9% on the appointment of a CEO, maybe that's the market saying, "Ooh, we don't like this at all. We don't like this." Now, I can't say anything about this particular person because I have no idea who they are. It's who was it? Carmen Riley, CEO, Executive Director of Paragon, effective 1st of July. So that's next week. She's been the Chief Operating Officer, Executive Director of Paragon since the merger with Clifford Hallam Healthcare. I totally forgot about that. And prior to that has been a CH2 for 15 years in various senior roles. Anyway, so the market doesn't like it. Paragon Care, I was trading this for a while. I'm out of this trade, and you'll be able to see why. So the chart was in a beautiful uptrend. In fact, this merger occurred on the 5th of March, or the news of this merger occurred on the 5th of March, 2024. That was a beautiful breakout. That was a perfect breakout. And you can see the share price rallied a fair bit on that day and then pulled back. Beautiful pullback, exactly what you want to see. I did not buy in on that pullback, but I bought a little bit later. And then I kept on riding this and got out probably in here, March of this year. Probably got out here because the share price sort of lost its uptrendiness. And the share price really has done nothing since then. In fact, the share price today has got to a long-term low. In fact, a one-year low. There you go. A one-year low. Okay, on to company coming in. At number 3, we have SRG Global, another company I have traded in the past. I did get out of this one, but the share price is now significantly higher than it was. But I have to follow my rules. There's the whole reason I have rules. Anyway, 850 million of contracts secured in diverse sectors. That sounds pretty good. Now, in itself, one single contract win doesn't mean anything, but when you get collective of contract wins, that's pretty good. Secured 850 million contracts with blue chip repeat clients across Australia and New Zealand. So in water, energy, oil, gas, and industrial and resources, health and education, defense and transport, data centers, and commercial. Okay, so it looks like maybe they've just compiled all the contract wins into the one announcement, which I don't think is a bad thing. Anyway, onto the chart. This chart was looking really good. I like this one for a while. And of course, here we go. And look at this chart. It looks so much better even now. So this was a beautiful chart, a beautiful uptrend. I forget exactly when I bought some shares. I think it was, I bought some shares about 80 cents. And then they did a capital raising, if I remember correctly. I bought some more shares in the capital raising because the share price or the capital raising price was a significant discount. And then they did release the results on the 18th of February. Share price sold off on that day. The share price actually moved into a little bit of a downtrend. So I sold on this sort of downtrend, and I could have bought back in because we started to see share price move up again back in May. And yeah, so I should have been following this one a little bit more closely because share price has really taken off since then. This is a beautiful chart as well. And so we can learn a lot. And again, there's a lot of opportunities out there, and I never regret. So even though I sold out and didn't buy back in, I don't regret that because I have some other trades. Man, you don't have an infinite amount of money. Okay, so that's SIG Global. Coming number 3. Another company I was trading, then I got out, was Tasmea. Share price up 10.1% on financial year 26 earnings guidance. Earnings guidance. Looks like they are performing better than their prospectus forecasts. So they're reaffirming financial year 25 NPAT guidance of 52 million and underpinned by a robust year-end earnings trajectory that sets a strong pace leading into financial year 26. The company expects to achieve financial year 26 EBIT of 110 million, up 45%, and profit of 70 million, up 34%, tracking 1 year ahead of its long-term incentive plan. Okay, maybe that wasn't in their perspective. So it looks like they are 1 year ahead of schedule. And that's exciting. So this is another case where I took a position in a newly listed company, and then I got out because my rules told me to get out, and the share price has turned up. Very similar than SRG Global, huh? So I forget what I got in, maybe back in September of last year. Share price was looking pretty good, chart was looking good, got out, and again, just like SRG Global, I didn't buy back in. I did have a look at this one as a potential buyback in, but did not. So both companies, SRG Global and Tasmea, both at all-time highs or near all-time highs. Definitely for Tasmea, it's an all-time high. Okay, back to the stock of the day. Well, maybe not back to because I haven't talked about this company just yet, but it's Droneshield. Share price up 21%. Now, the market cap of this company is now $2 billion or something like that. And I will not even think about buying Droneshield shares now. These price here, 1.9 billion. So there's a lot of froth in this company back again. And you can see the share price drop a significant amount. So I have traded this in the past, and I was following this one. Oh, by the way, we should talk about what they've released today. 61.6 million European military contract. Now, that's a pretty good contract. So it's the biggest one they've had, but they've also increased their pipeline. Yeah, so this is the biggest single order in Droneshield's history and is larger than the company's entire revenue for 2024, 57.5 million. My only concern, as I mentioned before, is just the current market cap of the company, almost $2 billion. So there's a lot of growth priced into Droneshield. So I'd be a little bit wary that the share price has just significantly increased just based off hype and froth. Anyway, they also mentioned, did I mention, I didn't mention, I thought they mentioned, maybe it was something else, but they mentioned pipeline. Or maybe I read that somewhere else. Let's have a look. I might have read that in Capital Brief where they did mention a pipeline. Let's have a look. Droneshield. I definitely read somewhere where, yeah, here it is. Droneshield shares jump as it flags 2.4 billion sales pipeline Europe contract. I can't see the pipeline here. There should be a big number. Anyway, so in this particular article, they just mentioned 2.41 billion pipeline. It was significantly higher than it was this time last year. So 1.2 billion pipeline last year. It doesn't mean that's how much their contract's going to be worth. It's just there's a lot in the pipeline. They could win a few of those contracts, but still up in the air how much they're going to win. So a lot of excitement in Droneshield right now, and it is starting to look like it did back a few years ago when maybe even less than 2 years ago. You can see the share price went up a massive rally. This was back in, well, this time last year almost. Yeah, this time last year. Share price went all the way up to about $2.72 and then just dropped. Definitely, we're starting to see sentiment shift in February of this year when the share price was like 80 cents or so. So we did get sort of a buy. I still remember that thinking, oh, maybe I could buy some shares in Droneshield. A nice little dip there. And this is a beautiful uptrend right now. We have all the makings of a beautiful uptrend. I wouldn't be buying on this one because share price is now well above the moving averages. And the share price, again, the valuation of the company is looking a little bit frothy at these levels. Anyway, so that's where I am with Droneshield. But again, as I mentioned before, there's a lot of opportunities in the market. So just because I miss this one, no need to regret. No need to regret. Okay, now on to Treasury Wines. So Treasury Wines down 1.7% today. They released, they had an investor update yesterday. I did go through this fairly quickly, and I thought, oh, it sounds good of what I did go through fairly quickly. There was nothing to be absolutely upset about. They're also doing a share buyback. Here we go. Financial year 25, EBITS. I forget what the E is or the S is. Earnings before interest and taxation, and S. They use EBITS a lot. And sometimes they don't say what EBITS is. Sometimes you just have to Google it. EBITS, earnings. Doesn't say that. Meaning. Oh, I'm going to kick myself when I... What is the S? What is the S? Oh, the abbreviation EBITS is not a standard financial term. It is likely a typo or misunderstanding. No, it's not. Treasury Wine uses it. And sometimes they will put a little bit of a meaning of what it is somewhere in their announcement, but I can't see it here. Anyway, so they use EBIT. So they are forecasting that to rise 17% on the previous corresponding period. I thought this was pretty good, doing a share buyback. So that should mean they think the company is undervalued. Anyway, so capital management. I love when companies talk about capital management because, in my opinion, that's one of the most important jobs of management. Capital management, capital allocation. What do we do with the money that we are creating in the business? Do we strive for significant growth, or we just give the money back to shareholders as dividends and share buyback? So I love when companies release that. Anyway, yesterday's share price, as what's his name said? Sorry, I forgot your name already. Who was it again? Jake Chard. As Jake Chard said, share price did open up 6%. I was like thinking, oh, that's pretty good. And then the share price pulled back during the day, and we've seen drop today. So let's have a look at the chart, because the whole point of this is chart of the day. Okay, Treasury Wines chart of the day. So you actually see that, yeah, share price did drop a fair bit. In fact, it was down by the end of trading. And if you have a look at the 1 minute chart, yeah, the share price, well, it actually didn't pop up then instantly drop. The share price high was at around about, oh, wait there, that's the wrong day. Today is Wednesday. We have to go back a little bit further. There we go. What day was it yesterday? Yeah, the share price did open up. No, is that right? Today is the 20. Oh, the wrong day again. There we go. That definitely, we can see that share price opening up 5%. It got up to 6% in the third minute of trading and then just dropped away significantly. And you'll be able to see why the share price has dropped away significantly just by having a look at the chart. Share price has been a long-term, well, maybe a long-term, definitely a medium-term downtrend. Share price has dropped from, say, between $11 and $13, is now down to $7.87. So a pretty nice downtrend right now. So whenever you see the share price rally on open like we saw yesterday on not much, definitely not huge volume. It also not the sort of announcement that would get me overly excited. And that's why the share price sort of peaked and dropped away instantly, because we saw a rush of sellers coming in. So all these buyers, shareholders, bought at high prices, believe this company is a dog stock. They saw the share price up 5% yesterday and went, oh, I can now sell my shares of this dog stock at a little bit higher of a price. And we just see the buy side or the sell side just overwhelm the buy side, and the share price drops. And a lot of those sellers just sell on market. They don't put a price in, they just sell on market, and that does force the share price down. So this is sort of common. When you see the share price in a downtrend, company releases what you think is a pretty good announcement, you just see pressure on the share price because of the psychology of the investor. And that's a negative sentiment has translated into today. Share price is now at a long-term low. Now, I'm interested with Treasury 1 because of where the share price is in historical levels or compared to historical levels. So we are seeing the share price now fall below what we saw during COVID-19 and when Chinese put those massive tariffs on Australian wines. So the sentiment in Treasury wines right now is worse than it was back then, which is really interesting. So the market just doesn't believe that this company can grow. The market just doesn't believe this company right now. But I think there's a chance the market is possibly getting this wrong. Possibly. Okay, and update to Collins Food and Cogstate. I think we can almost say these are breakouts. So Collins Food, we saw a little bit of selling yesterday. Share price pulled back below $9, finished at, say, $8.50. And today we've seen a lot of buying coming in. We've also saw, I remember I was going to talk about this. One of the reasons why, what happened yesterday with Collins Food, they released results better than expected. Their outlook was also pretty good. Better than expected, I suppose. The reason that can be so powerful is brokers have to update their algorithms. They have to put new numbers in. And those algorithms spit out a fair value. So all these brokers are doing that now, and their algorithms are spitting out a true value, well, maybe not true value, but the fair value for Collins Food. And what you do is you get upgrades. Collins Food shares continue to rally as analysis upgrade price target. That is why these sort of events can be really powerful and can drive a shift in sentiment and the trend of the share price. It all has to do with analysis estimates or updates, that sort of thing. So I'm calling this a bit of a breakout for Collins Food. Share price has gone above $9. And the other one was Cogstate. I'm more interested in Cogstate because I'm trading this one. And I got in preemptively or prematurely on the belief that this will break out. And what I wanted to see is the share price get above about $1.52 or so. And it looks like it's doing that, up 6%, up to $1.57. And the share price, last time it was this high, was way back in late 2023. So share price is at a 1-year high. And this chart just looks good. I like this chart for Cogstate. So nice little update for both of those companies. Okay, that is all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.